The rich don't fear economic chaos, they profit from it. Trump's new tariffs, global market changes, and wars and inflation. While most people are frozen with fear, the wealthy are quietly making their next fortune. And I've spent years studying the playbooks of the ultra-wealthy, and right now, they're making specific moves most people won't even hear about until it's too late. In this video, I'm showing you exactly what I'm doing with my own money right now, the specific assets I'm buying, and the wealth preservation strategies that are working in 2025. By the end, you will understand why some of the richest people I know are actually celebrating this economic turmoil, and how you can position yourself to join them. Before I share my strategy, quick disclaimer, this isn't financial advice, it's my personal approach based on my situation. And it works for me right now, and maybe it will not work for you, but always do your own research. Now hit that like button if you're serious about building wealth during uncertain times, and let's dive into my exact investment playbook for 2025. Let's be brutally honest, what is happening right now? The new Trump administration has implemented tariffs up to 145%, the highest since 1943. Global markets are reacting, currencies are fluctuating, and central banks are scrambling to adjust their policies. But here's what most people miss. Economic disruption doesn't destroy wealth, it transfers it. And think about it, during every major economic shift in history, from the Great Depression to the 2008 financial crisis, certain assets and strategies not only survived, but thrived. The question is whether opportunity exists, it's whether you are positioned to capture it. So what am I personally going to do with my money right now? Let me walk you through my strategy step by step. And again, this is what works for me and my situation. It might be completely different for you. I'm sharing my personal approach here. Gold has always been the go-to safe haven during economic uncertainty. But in 2025, there's a unique dynamic at play. With rising geopolitical tension between major powers and unprecedented levels of government debts worldwide, gold isn't just a defensive play, it's becoming a strategic necessity. And last month, I increased my gold allocation from 5% to 15% of my portfolio. And why? Because gold is the only financial asset that's truly independent of banking system and government. And think about this, if you had put $10,000 in gold in January 2020, right now it will be $15,000. That's a return of 50% while many other investments crashed. But here's my take on this. Physical gold is better than gold ETFs right now. In Switzerland, where I store some of my physical gold, private vaults are reporting unprecedented demand. The smartest money is going physically and not digital. They want to be actual. They want to be actual metal, not a paper promise. And of course, storing physical gold comes with its challenges. You need secure storages, insurance, and a trusted custodian, but the peace of mind, that is priceless in times like these. Now let's talk about real estate, but not in the way you might expect. Now many investors are fleeing real estate markets due to rising interest rates and economic uncertainty. And that's exactly what I'm selectively buying. The key word here is selectively. So I'm not buying everywhere, I'm targeting specific markets where three crucial factors align. Strong rule of law and property rights, favorable tax treatments, and limited new supply coming to the market. Now let me give you a concrete example. Now, Dubai's real estate market is experiencing a unique moment right now. While property values in places like London and New York are stagnating, Dubai saw a 23% increase in prime property values last year. And why? Because the UAE offers several things. First of all, zero personal income tax, no capital gain tax, no property tax, and an excellent security and infrastructure. One of my clients purchased a $1.5 million apartment in Dubai Marina last year, and not only has it appreciated by 20%, he's also earning an 8% rental yield, and that's all completely tax-free. And that's also the reason why all those wealthy individuals from the UK and Europe and even from the US are flocking to Dubai. It's not about this lifestyle only, it's also about the wealth preservation in an increasingly unpredictable world. Let's address the elephant in the room, the stock market. And most people are all in or completely out, and I believe that both approaches are wrong. Instead, I'm implementing what I call the Fortress Portfolio strategy, with a heavy focus on innovative sectors that will shape the next decade. First of all, my foundation. I'm heavily invested in companies with three specific qualities. I look for businesses that sell essential products that people buy regardless of economic conditions. They need strong balance sheets with minimal debt, and they must have a significant pricing power to pass inflation costs to consumers. Think about companies like Nestle or Johnson & Johnson. These aren't exciting tech stocks, but they are companies that have survived world wars, depressions, and every market crash in between. And here's where it gets interesting. Nearly 40% of my stock allocation now is in two innovative sectors that I believe will transform our world, and that's AI and EVs. Let's start with AI. Look, we are not in a bubble. We're in the early stages of technological revolution. But I'm not buying just any AI company. I am focused on the companies that own the infrastructure to make AI possible. Think about the companies that own the picks and shovels of the AI gold rush. In the EV space, I'm not just investing in the car manufacturers, but I'm looking at the entire supply chain. So I'm investing in battery technology companies, charging infrastructure providers, and the miners supplying critical metals like lithium, nickel, and copper. One of our clients who focused on lithium producers last year saw a 35% return while broader EV manufacturers struggled. And why? Because regardless of which car maker wins, they all need those materials. But here's the key with innovation investing: I maintain discipline about prices. So I buy these stocks in tranches, especially during market overreactions and sell-offs. Lastly, I maintain liquidity. About 20% of my portfolio is in short-term government bonds and cash equivalents. This gives me the ammunition to buy when genuine opportunities arrive. Remember, it's not about hitting home runs, it's about consistent single and doubles by avoiding strikeouts. I know what you're thinking, what about crypto? Look, I'm not one of those crypto is dead people. I'm also not a crypto guy who believes that crypto will replace all the money. I believe that the truth lies somewhere in between. And here's my approach: I allocate 5% of my total portfolio to crypto, not more. This way, if it goes zero, which it won't, I'm not financially ruined. But if it multiplies 10, that 5% becomes a lot of money. And with that 5%, I follow the 80-20 rule. About 80% goes to Bitcoin and 20% go to Ethereum. Here's the real crypto secret that most people miss out, at least that's what I believe, that's tax loss harvesting. The volatility in crypto creates incredible opportunities to legally minimize your tax bill. So for example, if you bought crypto or Bitcoin, let's say at $60,000 and it drops to $40,000, you can sell it, claim the loss and your taxes and buy it back immediately. So unlike stocks, most countries don't apply wash-sale rules to crypto. Let me drop a truth bomb that most financial advisors won't tell you: you're not diversified if all your investments are taxed the same way. Think about it. You might own stocks, bonds, real estate, and even some crypto, but if they're all subject to the same tax regime in the same country, you're still exposed to a single point of failure. Now, what happens when a new government comes in, decides to double capital gain tax or implement wealth tax or change inheritance tax overnight? Your diversified portfolio suddenly faces the same tax problem across the board. And this is why smart money focuses on tax diversification as much as asset diversification. And here's how I approach these things: I hold certain investment in low tax jurisdictions, or I put them in offshore companies. For example, one of our clients moved from the UK to Dubai, and not only did he eliminate his personal tax by doing this, but he also created a structure where the investment gains are completely tax-free. So what does this all mean for you? Economic uncertainty isn't something to fear, it's something to prepare for and potentially benefit from. Here's what my 2025 wealth building formula looks like. I've got about 15% in physical gold. I have placed roughly 35% carefully selected international real estate. Our 25% is in fortress stocks with strong fundamentals, and I keep 5% in cryptocurrency with strong fundamentals, and I maintain about 20% in cash and short-term bonds for opportunities. But honestly, I need to tell you something more important: the single best investment I ever made wasn't stocks, wasn't gold, wasn't real estate. It was relocating to a low-tax jurisdiction. That decision immediately freed up 30 to 40% of my income that was previously going to taxes. So doors opened instantly because I suddenly had significantly more capital to invest. No investment strategy can compete with that kind of immediate return. Still, this is my personal strategy based on my risk tolerance, my financial situation, and my goals. Your allocation might look completely different, and that's totally fine. You need to find what works for you. I just hope sharing my personal approach gives you some ideas and perspective to consider for your own financial journey. Remember, the greatest fortunes weren't made during economic calm, they were made during times of change and disruption. We are living through one of these right now, and you need to take action like right now. And hey, if nothing else, at least try to diversify how your investments are taxed. Because in my experience, you're not truly diversified if all your money is subject to the same tax regime. And I'm curious, which of these strategies are you already implementing? Or do you have a different approach entirely? Let me know in the comments below. If you found this video helpful, give it a thumbs up, share it with someone who needs to hear this message, and don't forget to subscribe for more wealth building strategies. For personal advice on global tax strategies, visit our website, amifiles.com. Thanks for watching, and I'll see you in the next video.